Right now, you live inside an invisible empire. Its borders aren't on any map. Its capital is not a city. Its citizens are contracts, and its weapon is a number. 300 trillion. That's the rough size of global debt today. Government debt, corporate debt, household debt, stacked together into a mountain of promises that can never fully be paid back. But here's the paradox. If everyone is drowning in debt, who is the lender? If the entire world owes more than the world produces, who actually owns all these IOUs? We talk about countries being in debt. We argue about debt ceilings. We fear default and collapse. But almost nobody asks the real question. When debt becomes this big, does it stop being a tool and start becoming a hidden system of power? Today, we're going to follow the money, to see how a web of banks, funds, and institutions quietly built the hidden empire behind $300 trillion of global debt. Debt is as old as civilization. Clay tablets in Mesopotamia recorded who owed grain to whom. Ancient kings declared debt jubilees to stop society from tearing itself apart. For most of history, debt was local. You owed your neighbor, your landlord, your king. If you didn't pay, they could take your land or your freedom. Then came something new, the modern bond market. States realized they could borrow from anyone willing to buy a piece of paper. Merchants in Amsterdam could finance wars in France. Bankers in London could fund railroads in America. After World War II, the United States emerged as the largest creditor. The dollar became the backbone of a new financial order. Institutions like the IMF and World Bank were created. Debt was no longer just a private deal, it became a global system. In 1971, the dollar cut its last link to gold. Money became more abstract. Credit could expand far beyond physical reserves. Over the next decades, deregulation, globalization, and technology did the rest. By 2000, global debt was around $87 trillion. By 2020, it had exploded past $250 trillion. Today, it hovers around $300 trillion and counting. So what exactly is this empire made of? And who quietly benefits from keeping the world in debt? First, strip away the jargon. Debt is simply a promise. I will give you money in the future if you give me money today. Governments issue bonds, corporations issue bonds and take bank loans. Households use mortgages, credit cards, student loans. Each of these is a tiny contract, but when you add them up, you get a global web of IOUs, a web dense enough to trap entire countries. On one side of this web are the debtors, countries like the US, Japan, Italy, Brazil. Companies like Evergrande or AT&T. Families buying homes and cars. On the other side are the creditors, but they are not just rich individuals. They are pension funds managing your retirement, insurance companies investing your premiums, sovereign wealth funds investing oil money, banks creating credit with a few keystrokes, and asset managers like BlackRock or Vanguard quietly holding trillions. Think of it as an empire of balance sheets. Every liability for one person is an asset for someone else. Your government's debt is your bond fund's income. Your mortgage is a bank's asset, sliced and sold to investors. Hovering above this is a layer of powerful institutions. The central banks. The Federal Reserve, the European Central Bank, the Bank of Japan. They set interest rates. They decide how cheap or expensive it is to borrow. They can create new money to buy government bonds. They are like the empire's central planners. Then there is the BIS, the Bank for International Settlements, often called the Central Bank of Central Banks. It doesn't appear in everyday news, but it quietly sets rules, standards, and capital requirements. Its meetings shape how safe or risky global lending will be. The IMF and World Bank play another role. When a country gets into trouble, they arrive with emergency loans. But those loans come with conditions. Cut spending, raise taxes, privatize assets. In exchange for dollars, countries reshape their economies. Rating agencies like S&P and Moody's act like imperial census takers. They grade your creditworthiness from AAA down to junk. A single downgrade can drive up your borrowing costs overnight. Suddenly, funding your schools or hospitals becomes more expensive. So the debt empire isn't ruled by a single king. It is run by a network of institutions, markets, and laws. Together, they decide who gets credit, on what terms, and what happens if you can't pay. The more indebted the world becomes, the more power this network holds. Every empire reveals itself during a crisis. In 2008, a slice of the debt web snapped. US mortgages, bundled into complex securities, began to fail. Behind a suburban house in Florida were leveraged bets in London, Frankfurt, and Tokyo. When Lehman Brothers collapsed, the system panicked. Banks stopped trusting each other. Short-term funding markets froze. For a few terrifying days, the modern credit system nearly stopped. Governments and central banks stepped in. Interest rates were slashed to zero. Trillions of new dollars, euros, and yen were created. Central banks bought government bonds, mortgage bonds, and more. They called it quantitative easing. The message was clear. This empire cannot be allowed to collapse. The largest borrowers and lenders would be saved. The debts would be rolled over, not written off. The next test came with the European debt crisis. Countries like Greece, Portugal, and Italy struggled under heavy public debts. Bond yields surged. There was open talk of defaults and exits from the euro. Again, the empire moved. Bailouts were arranged. Austerity programs were imposed. The European Central Bank promised to do whatever it takes to save the euro. In the process, democratic choices were often overridden by financial necessity. Then came 2020. A pandemic shut down the real economy overnight, but the debt machine could not stop. If incomes collapsed, debts would go unpaid. So once again, governments borrowed on a massive scale. Central banks printed and purchased like never before. Global debt surged by tens of trillions in a single year. The empire had found its survival strategy. Whenever threatened, expand. There is a turning point hidden inside these crises. Debt levels have become so high that allowing large-scale defaults would shatter the system. Too many pensions, banks, and funds depend on those payments. So instead of clearing the slate, the empire prefers low interest rates, quiet inflation, slow erosion of purchasing power, what economists call financial repression. Your savings earn close to nothing, but the value of money slowly falls. Debtors benefit. Creditors get paid back in weaker currency. The system survives, but ordinary people pay the price. And now, another tension is building. After years of ultra-low rates, inflation spiked. Central banks raised rates sharply. Suddenly, the cost of servicing $300 trillion in debt is rising. Governments face higher interest bills. Companies that could survive at 1% rates struggle at 5% or more. Every rate hike is a stress test for the empire. Somewhere, something will break. The only question is where and who gets sacrificed. What does all this mean for you? First, inequality. Those who own debt assets, bonds, stocks, real estate, sit on the creditor side. They benefit from bailouts, low rates, and asset price inflation. those who live mostly on wages and bank savings watch prices rise faster than their incomes. Second, political constraint. When a government is deeply indebted, every policy has to answer one question: how will the markets react? Spend on healthcare or education? Markets might demand higher yields. Cut spending to please bondholders? Citizens pay the social cost. Third, fragility. A world this leveraged is like a city wired with dry dynamite. A spike in rates, a sudden recession, a geopolitical shock. Any of these can set off a chain reaction through balance sheets worldwide. And finally, loss of sovereignty. When a country hits a debt wall, its fate is negotiated in boardrooms, not parliaments, not town halls. In meetings between finance ministers, bankers, and technocrats. The empire decides the terms of survival. So, is the debt empire some secret conspiracy? Not exactly. It's more like a machine we slowly built, without fully understanding what it would become. Every promise to pay, every bond issued, every bailout added another brick to its walls. No single person is in charge, but that doesn't mean it's neutral. Its rules consistently favor those closest to the flow of money. Big borrowers, big lenders, institutions too big to fail. For most of us, the danger isn't that the empire collapses overnight. It's that it continues, slowly draining purchasing power, shaping policy in the background, turning democracies into managers of balance sheets. Understanding it is the first step, because debt is not just numbers on a screen. It is a power relationship between those who must pay and those who can wait, negotiate, or be rescued. So here's the uncomfortable thought to leave you with. If you had a button in front of you, press it, and all $300 trillion of global debt is wiped out overnight. But so are many pensions, savings, and financial assets. The empire falls. The slate is clean. Would you press it? Tell me in the comments. Would you erase the debt, no matter the cost, or keep the empire and try to reform it from within?